Hello, everyone, and welcome back to another episode of the Property Venture Podcast. As usual, I'm joined with my partner tonight, Anthony Lodja.
Thanks, Giancarlo. We're excited to have another special PVP podcast.
Yes, and I'm super excited about today's guest. Today's guest is a longtime friend of mine, someone that I have known for quite a while right now, and he is an accountant by profession and a real estate investor. So without further ado, I would like to introduce Jonathan. Jonathan, thanks for coming and sit down with us.
Welcome.
Thank you very much. We're excited to have you here, Jonathan. We're excited to have you here. So let's dive into it. I want to get straight to it. Welcome to the show. We're excited to talk to you a little bit about your journey from a professional accountant into becoming a real estate investor. Tell us, where did it all begin for you, Jonathan?
Well, very simple. Taking a step back from talking about real estate specifically, I'm just the type of person that I like to continuously learn. So, I was in school studying marketing, switched over to accounting, got my professional designation. And then I told myself, well, now I'm working as an accountant in the corporate world. I understand numbers. And even in the corporate accounting world, I'm moving on from numbers to accounting systems, to selling accounting systems, to using specific types of technology to optimize specific processes. And then I told myself, the further I'm getting away from numbers, I actually miss those numbers. So what can I do in my life that allows me to take a look at some spreadsheets, build some reports, look at some data? And I said, you know what? I have some free cash. I've been working a while, so let me take a look at real estate, right? What's this real estate thing all about? And that's where essentially I said, you know what? My longtime friend Giancarlo and Anthony, they're real estate brokers. Tell me all about it. And that's where essentially the analysis and interest pretty much began.
Amazing.
That's amazing. So I know you already touched up on your background in accounting. Now, how did it help you exactly when buying your first property?
Well, when you're buying a property, what you want to first assess is, what are your costs? How much is it going to cost? How much am I making? How much am I worth? Where am I going to get the money? How am I going to get the money? Who am I going to speak to? But at the end of the day, numbers matter, and I am a big believer in, sound financials when you're making a purchase, and who better to do that than somebody who works in accounting? It's funny because a lot of even before I got into accounting, even before I got into real estate, myself, there were a lot of people that were getting into real estate beforehand asking for my advice. So again, before I even got into real estate itself as a personal endeavor, I was already pretty familiar with the ins and outs. So, what's the property bringing in? If it's an investment property, or does it make sense as a personal purchase if you're buying a home for you and your family, or for personally?
Yeah, amazing. I think that's key, being able to assess a property, not just as a building, but as a financial asset seems to be also your strong suit, numbers, of course. So tell us how you managed to scale from your first building to the 7 doors that you currently own in Montreal now, and even moving into international investments. I mean, I know how you did it, but for our listeners listening, if you could just give us a little breakdown on that.
Yeah, no, that's an excellent question. And to be honest with you, I think every property was completely different. So I guess I'll give you 3 ways and I'll start with my personal property, right? So as I got a couple of years of experience under my belt, I purchased my very first condo in Griffintown, Montreal. And essentially that was paid with hard-earned savings, right? Again, if I look back today, I don't believe spending liquid cash on a down payment is the way to go, but that's how I did it the first time, right? So again, option number 1 is work hard, save your money, limit your expenses, and finally you'll realize that you'll have enough to get by. Second property was I saved money, but not enough to buy a second property. So then you look at who can I invest with, right? Who can help me get money to put a down payment in a property that you're looking for? So on my second property, again, I used hard-earned savings, but again, in understanding down payment requirements and the likes, I went in with a partner to purchase a lucrative, revenue-generating triplex. The third time around, I used a more fancy approach, and that's because I continue to learn more and more about the market. So again, I realized that you can do a lot of damage in the market when you look beyond the money that you save in a typical checking or savings account. And I realized, other people's money, OPM strategy. So again, when you're using home equity lines of credit, for example, as a means to finance another building and continue putting more brick under the asset column.
Yeah, definitely. I think that's one thing I could relate to as a real estate investor. My first investment was a traditional investment. Saved up the money for the down payment and so on and so forth. As I went on as an investor, I opened my mind to a more creative strategy. When I wanted to scale, I said, there's got to be a more creative way to do this. And it was amazing the things that we've learned, when it comes to OPM. So with that being said, Jonathan, I want to do a little bit of a fun segment here. We call this, What Would You Do? So what we're going to do is we're going to play a round of What Would You Do? And I'll be asking you a hypothetical question. And you just tell us exactly what you would do in this scenario and how you handle it. Are you ready?
Sounds good. Let's go.
All right. So, Jonathan, what would you do if one of your international properties suddenly faced new, unexpected laws such as tax challenges? And how would you handle that if it severely impacted your cash flow?
So that's an interesting question. So, taking a step back from the original question itself, just to contextualize, I do believe that before you go internationally whatsoever, before acquiring foreign assets, I do believe that, I strongly, recommend that you build a solid base locally. Again, that's not a prerequisite. I don't believe that it's an all or nothing situation, but I do believe that personally, I find comfort in having enough assets locally, something that I can touch physically or drive to physically, in order for me to be safe in a situation where if I'm subject to any foreign risk, in this particular case, an increase in my liability to pay taxes to a foreign government, that I have enough cushion locally. Now, with the assumption that I don't have that cushion, and it's an excellent question, is you have to think about, okay, why did I buy that foreign property? So if I bought that foreign property, for example, as a toy for me to go there and become a snowbird. We live in Montreal. It snows. We hate it.
Yeah.
But if I basically buy a foreign asset, for example, in a sunny state, if my original intent was to go there while it's snowing, like I said, I might have to take a step back and say, look, I need to make a little more money on this thing to cover my liability. So what I'll probably look to something along the lines of a Verbo or an Airbnb to be a lot more aggressive in renting out the unit to cover that liability. So I think you need to be agile in your strategy. You need to come up with creative ways to come up with that liability. You don't want to get in trouble with foreign government.
No, and I like what you said there about, earning experience, investing locally.
Yep.
I think that, for myself as well, you earn your experience by investing in your backyard. And once you learn about real estate investing, then investing internationally is just another layer to the cake. If you could do it locally, you could do it internationally.
Oh, Giancarlo, with that being said, I think listeners understand that maybe you have more of a conservative approach to investing in real estate. And going international is still a huge leap for any investor.
Yeah.
So what was your motivation, and what advice would you give someone who's maybe ready or not too sure, but interested in taking that next step?
I would say diversification, right? So if you're talking to somebody that invests heavily in the stock market, what they'll tell you is to not put all your eggs in one basket, right? Yeah. So I'm not going to continue to buy a bunch of homes for myself. What I'm going to do is buy maybe a home for myself with a revenue property. If you're trying to accumulate a portfolio of revenue properties, I'll probably look at different areas just in case one of the areas takes a hit or one of the areas, loses and or gains value. So again, diversification is key. Ultimately, a foreign investment adds to that level of diversification. And again, like I said at the beginning of the show, I'm somebody who likes to learn. And I think that, over time, and it's funny because the 4 or 5 investments that I've made are all completely different, right? From personal home to revenue property, to foreign investment property. So again, every deal I've worked on so far is completely different. Every single property had its own, I've learned new legalities, new rules, new strategies, et cetera, et cetera. So again, first off, diversification. Second of all, continuous learning, right? And to be honest with you, a third key point is you're expanding your network. So again, when you get into real estate investing, not only am I working with brokers who then can expand my own professional network, you can just imagine that compounds exponentially when you're dealing with property that's not in your own backyard, right? So you're working with lawyers, brokers, and other professional contacts that are outside of the country, which again, we live in a global society. I think it's extremely important.
I think that's honestly great advice, and having the right people around you really contributes to success, right? Because you could go fast alone, but you could go far together.
Absolutely.
So with that being said, let's talk about these international investment for a second. Let me ask you, what interests you about investing internationally compared to here in your own backyard, Montreal?
Oh, there's a lot that interests me. Number one, the function of money, right? So when we talk about the function of money, it's down payment requirements, prices, tax exemptions, interest rates. So again, I'm a numbers guy. I'm an accountant. All of these things matter. And when the sum of all of its parts makes it extremely interesting for me to learn to put the puzzle pieces together to find a good deal and structure a good deal and to make a good investment. And again, it's creating different revenue streams, whether it's a revenue property from people that you're renting monthly, like what I have in my own backyard, or kind of like an Airbnb type of or verbal deal in a foreign property. So again, I think what interests me is everything that I've learned about all of the different rules and regulations in those foreign countries and all of the different permutations and calculations that had to get put into a spreadsheet for me to come to these decisions. So again, it's a project in and of itself, right? It goes beyond my 9 to 5 professionally. And I think again, it all ties back to the learning process, but those are the elements that interested me. It's really the financial aspects and differences between the different countries and how they all work.
Yeah, there's definitely a lot of opportunity internationally. And as soon as you familiarize yourself with these different and various opportunities, doors open up for you. All right, so let's move on to a little bit of a fun segment. And we're going to talk about crazy investments. True or false, Jonathan? There was an investor who bought an entire village in Spain for just under $1 million. True or false?
Absolutely true.
Absolutely true.
Yeah, whole village.
An entire village.
Absolutely.
He bought it in hopes of turning it into a tourism attraction.
Wow. Absolutely true. Actually, just to get clarification on the game, should I explain why I think it's true, or is it just
Sure.
Okay. Okay. So part of my diversification strategy was trying to look at my roots. Right. I was looking at properties in Italy, and everybody knows from a few years ago the popularity of dollar properties. Right. There's a lot more money that goes into a $1 property. So again, when you buy an entire village or even city for that matter for under $1 million, totally reasonable on paper. But there's a lot going on behind the scenes that is not on paper or on that specific purchase price paper. So even though your initial purchase price to buy an entire city is under $1 million, it'll cost you way more than $1 million to develop the land that you purchased into or the infrastructure that you purchased into. But getting that initial purchase I would even say under 100,000 is reasonable.
That's amazing. That's really honestly amazing. So with that being said, we're going to move on to another segment here, and we want to know what your tips would be for new investors. So let me ask you, with everything that you've learned in the past and growing your portfolio, what would be the biggest piece of advice you'd give to someone who's just starting out building their real estate investment portfolio?
Don't do it yourself. Ask for help. Build your network. Everybody has something to offer. Everybody has a different strategy. And I'm a big believer in help. Like I explained before, on the second property that I bought, I found an investor. Again, you want to find ways to finance your properties. So whether that's with people, banks, brokers, partners, if you plan to incorporate. I mean, there's a bunch of different ways that you can do it, but ask for help, ask for advice, get a second, third, fourth, fifth opinion. There's never enough information. There's no such thing as a stupid question. And I think, hearing different people's perspectives puts into perspective, whose shoes best fit yours and what strategy best fits yours given your employment situation. If you've received an inheritance and don't know what to do with your money. I mean, there's so many different cases of where you're getting your money or where you need to find your money, and I guess getting different perspectives and a diverse set of points of view is my absolute recommendation for anybody getting into the game.
And even when you're trying to choose someone to go into these investment properties with, what are you looking for?
I'm looking
partner.
Yeah, no, a very good question. I'm looking for somebody with the same objective. So, for example, if I'm looking for a partner for a revenue property, right? So something that I'm renting out monthly to tenants. So let's say a triplex, fourplex, or significantly larger. Are we flipping it? Are we keeping it? Are we renovating it? Are we not renovating it? What's your timeline, right?
Yeah.
Can I trust that you're not going to, ask me to buy you out after the first year, right? Who are your contacts? I want to go into business with somebody that has contacts, that is as curious as me. So again, we need to have the same mindset, objectives, and again, we just need to be aligned, right? Because if you're going into you could be best friends with someone. Businesses destroy friendships. Yeah. So again, I would rather find somebody that is completely aligned than going into business with a best friend, with a childhood friend. So again, I would say that your objective should be aligned.
And do you have anything on paper? Is this something you make official?
I personally would. Again, friendship and money is an interesting combination. They even say family and money is an interesting combination. So again, the couple of $1,000s that you'll spend on a lawyer is worth everything when things change, right? Again, some people don't make decisions out of spite or out of disrespect. Sometimes, things happen in life. People get sick, people get divorced, people move away, people have children, etc. Like some people, they go through things that their journeys in life are just not aligned with you. So you do need to come to an agreement with that person for all of these scenarios. And there's nothing more comforting than to sit with an accountant or a lawyer or whoever, or a notary, for example, depending on exactly what you want to get signed. But there's nothing more comforting for both parties or multiple parties to sit down and get everything on paper. Again, it's worth all the money in the world.
Yeah, you're absolutely right about that. And if I could just add, one of the things I look for in a business partner is someone who could complement me. Mm-hmm. So someone whose skill set differs from mine, and could help elevate the game, So that's really awesome. I think we're all on the same page when it comes to that. So with that being said, Jonathan, the way we close off our episodes is we finish with a final segment called Quick Shot. I'm going to ask you questions, okay? And you need to answer off the top of your head. Okay. All right. Are you ready?
Yep.
All right. So multifamily properties or single family properties?
Multifamily.
All the way. I couldn't agree less. I couldn't agree more. I mean, I'm definitely a multifamily guy. Okay. Now tell me, tax deductions or appreciation?
I'll go off the grid and say it depends. I would say when you're starting out, in your first 2-3 years, I would say appreciation. Later on in life, I would say tax deductions become paramount.
Yeah.
And would you invest in a property that's been on the market for over a year?
Absolutely. With the power of OPM and different strategies for optimizing a property that is unattractive today, is the type of property you want. You can negotiate better with that seller, and you can, with enough buying power, with enough financial backing, you could do some special things to that property to turn it into a very lucrative and attractive building, depending on what you're buying.
I couldn't agree more. The money is made off the buy, so if you buy right, that's what makes the investment. So Jonathan, that was so much fun having you join us today. It's always fun having a friend of mine and fellow real estate investor join us. So thank you for sitting down and sharing your incredible journey with us. We really appreciate you taking the time to sit down with us.
Yeah, seriously, Jonathan, thank you so much. And maybe in a future podcast, we could go through maybe his investments, how he made those decisions in order to get there, the numbers, because I think it's paramount when starting off in real estate and hitting that first investment.
Yeah, I'm an average Joe. Thanks for having me on board. And I think it's important to talk to people that have modest portfolios and not people that have 3,000 doors, right? So again, people are interested in knowing how it all started, and happy to contribute, happy to answer all these questions. And it was extremely fun. I had a blast.
Thank you so much. And to our listeners, please make sure you follow us on social media for more updates. And if you want more expert advice, you know who to contact.
Guys, and until next time, keep learning, keep investing, and remember, real estate is all about taking smart risks and seizing opportunities. We'll see you guys on the next episode.
Thank you.